Or wake up money time. That nearly $1 trillion rescue bill signed into law by President Bush last Friday includes, strangely enough, income tax benefits for individuals and businesses for the years 2008 and 2009. To explain those benefits to us, certified public accountant Bob Martin joining us again this morning. Hey, Bob.
Good morning.
So, kind of lost in all of this are some tax benefits. What are they?
Well, some of the most important ones is the alternative minimum tax patch. We also have the child tax credit has been enhanced. There are energy tax provisions in here. The most important thing is that they've continued deductions we've gotten used to. For example, the sales tax deduction, which started in 2004. It ended at the end of 2007, but now it's been extended for 2008 and 2009. We also have some other benefits in there. Qualified tuition deduction has been extended, and the $250 deduction that teachers can take for classroom expenses. Also, we have something new that was in the law for 2008, but it'll be continued, and that is people that take the standard deduction but also pay property taxes. A single person will be able to deduct an additional $500 in property taxes, even though they don't itemize, and a married couple can take a $1,000 deduction.
There are some benefits for businesses as well. What are those?
Well, the most important is that businesses will get to accelerate certain deductions. For example, they'll get faster depreciation, their research and development credits, and also businesses that have alternative energy investments can get credits up to 30%, which will be very, very significant.
Now, there's a lot to digest here. If I'm an individual or a small business owner that wants to take advantage of these, what do I need to do to get on that gravy train, if you will?
Well, the most important thing, of course, is keeping all your receipts, but also plan. We're approaching the end of a year. For example, the sales tax deduction. If you have some major purchases that you're planning, you may want to go ahead and make those between now and the end of the year. For example, if you're purchasing a vehicle, if you're making major improvements, you may, and you have sales tax on those, you may want to spend that money by the end of the year.
Because the way that works, there's a standard deduction unless you want to itemize every single thing you bought every year. But there's also on top of that standard, if you can lay claim to a big purchase such as a car, you can add that on there. And that can be hundreds of dollars.
Oh, yeah. What you're referring to is there is a standard table that's based on your income level, and you can use that table for your regular purchases and then add, for example, the purchase of a vehicle or other large purchases to that amount.
All right. Well, that is tucked in there in that nearly $1 trillion bill, so something for Joe and Jane Consumer. Bob Martin, we appreciate the wisdom this morning, as always. Thank you, sir.